Hello, everybody. Today is June the 16th, 2025. And midway through 2025, I want to do a deep dive into the Magnificent Seven stocks. Of course, there are the stocks everybody has benefited from over the last 5 years, and we need an update. We need an update on what's the all-star company, which is clearly NVIDIA. And frankly, something that's interesting that needs to be discussed, the 2025 all-star stock, not company, is Tesla. So this is going to be a very interesting focus on just 7 stocks. And the two all-stars, which are the company Tesla, and I should say the stock Tesla, and the company NVIDIA. So first off, keep in mind that this is my views, the views of John Blank. I do have a PhD from MIT, and they are not necessarily the views of Zacks Investment Research. You can read the rest of this at your leisure. So the first stop here, I'm going to go through depreciation, amortization, total debt, and the things I would most like to focus on: free cash flow and return on equity, since this is, in fact, the Magnificent Seven stocks. So number one is this incredible free cash flow drive from NVIDIA. And you probably do not remember that NVIDIA was relatively, profitable and growing, but it had a big downturn for a couple of years, and it was brought itself back. So the first thing I want to point out is the incredible story of NVIDIA, where it really was a bounce back story. The other ones, Apple, of course, sideways, Google, sideways, Tesla, sideways, and a big cyclical move in Meta. The other one is quite demonstrably interesting, is the huge cycle in Amazon, up and down, and then down, up again, and then down again. So keep in mind, we have lots of evolving stories in these 7 stocks. NVIDIA, of course, you can see the depreciation and amortization, nowhere near the size of Amazon. That's clearly just a monster company, Amazon is. Return on equity. Amazing job by Apple. I'm sure this is motivated share repurchasing. And here you've got the surgy ROE of NVIDIA that goes with that free cash flow. So we all know this story started in 2023, middle of 23, and now, of course, we're seeing it kind of taper off. Keep that in mind as well. Okay, so reinvestment rate here, enterprise value to sales, so valuation here, cash flow yield percentage here, and revenue forward 12-month here. So top one, reinvestment rate. Of course, NVIDIA, again, jumps out. Valuation, just an amazing enterprise value to sales for NVIDIA. And the weakest, of course, is Amazon. Incredible valuation, but in truth, it's even been higher for NVIDIA over a lot of periods of time over the last 5 years. Over here, I got the cash flow yield. It's a fascinating chart overall to organize your thoughts on these stocks. Tesla's at the bottom with NVIDIA, by the way. Google and Amazon are at the top with Meta, Apple, and Microsoft in the middle. So here you have a totally different framework to think about. Here you've got revenue growth. Of course, Amazon is, in its own league. And here again, you can see NVIDIA catching up quickly. Everything else is relatively good here, although Apple has been flat for 4 years, and Tesla has actually gone down for 4 years. So Apple and Tesla are showing revenue weakness. NVIDIA and Amazon are showing revenue growth, and Google and Microsoft are somewhere in the middle. All right, next, net margin here, total debt to capital here, CapEx to depreciation here, and earnings per share on a forward 12-month look here. So first of all, net margins in NVIDIA are 52%, just shockingly high. The rest of them are quite good, other than Amazon and Tesla at the back. Amazon, of course, at a 10% net margin, and Tesla at 6%. Amazon, of course, driving that 10% margin and an immense amount of revenue. Tesla is not doing that. Okay, total debt. The least is actually Google, less than Tesla itself. And NVIDIA and Tesla are actually fairly low debt suppliers. Apple has the most. CapEx to depreciation. So CapEx spending actually A lot of it's happening at Google. We're thinking about that. Apple doing very little of it. Over here, earnings per share, astonishing outperformance by Meta. And of course, that has reflected itself in the shares. And here you can see pretty much everybody other than Tesla is going up. Tesla will be poor fundamentals, but like I said, amazingly, contradictorily, everything. Tesla is the stock to talk about this year. Right, price, earnings, consensus, and EPS surprise charts. I want to point out the two weaker charts are Apple. Here you can see all the estimate revisions going down for Apple because of the trade war and their exposure to their Chinese production. Tesla, big problems with competition, pricing, the involvement of the CEO in other endeavors, all of this driving Tesla into a range trade for the last 5 years while the estimates are going down. So is the peak in for Apple? And is range trading all to be expected for Tesla? We'll ask that question. I don't really have an answer. NVIDIA, back to the highs, but not past the highs. And the estimate revisions look great, but you have to wonder if there's some kind of rolling over going here, 26, 27. People are starting to taper off their expectations. Meta, an excellent chart looking a lot like NVIDIA, but covering only to the highs, not past the highs. Microsoft actually is reaching new highs. And Microsoft is a really nice looking chart. Probably the best chart is Microsoft. Google, looking pretty sharp, but the stock is not even near the highs. So the market is actually seeing Google as kind of a potential, facing some competition with ChatGPT and the purchase of the Jony Ives Apple product company goods, physical products, getting some people concerned that Google may be, weak in the face of the next generation of all these companies. Amazon, same story, not back at the highs, and estimate revisions coming down. So there are worries about Amazon and Google, but not as significant as what's going on with Apple and Tesla. Okay, critical product revenue segments. I just want to point out the top revenue growth here. This is revenue for iTunes. Apple is a software and services company for half of their revenue. Keep that in mind. NVIDIA is at 90% data centers, 90% data centers. Tesla is 90% automotive. Of course, the 10% that is not automotive is supposed to explode, but at this point in time, there's no greater evidence of a company being just what it is, an automotive company, than Tesla. Quite different than the branding and the feeling out there from the market, from the stock perspective. Meta's advertising revenue is 98%, so heavily dependent on advertising here. Microsoft, revenue from Dynamics products and cloud is now 40%. 40%. Revenue from Office is now only 2%. Microsoft, really a different story than people think about. LinkedIn revenue, 3%. Revenue from Google search, 57%. 57%. Amazon net sales online stores is 39%. So now a minority of it is in those online stores that all of us think of Amazon. So like I said, I think this is critical for us to update ourselves on what these companies really are about versus what we think they are about. Okay, geographic segmentation. Revenues Americas. Apple is 43%. NVIDIA is 47%. Tesla is 49%, so just under half. Meta is actually least, the most international is actually Meta with only 40% US and Canada. Down here, you've got Microsoft at 51% US, Google 49% US, basically the same, and Amazon's actually the most domestic at 78%, 73%. So Meta and Amazon, I put them in yellow, are kind of the widest ones. Meta, the most multinational. Amazon, the least multinational from a revenue percentage perspective. Again, I'm sure you're as surprised as I am about the novelty of some of these discoveries. All right, stock characteristics. So what was the best investment here? Got them listed in order here. NVIDIA and Tesla. Over the last 8 years were the big plays. 57% return on NVIDIA, 40% return on Tesla. And it gets to be as low as 17% for Google. But in general, all of these outperformed the S&P 500, which was around a 15% return. So all you had to do is own these 7 stocks, and you did quite well. Now, the correlation matrices. Just want to point out Tesla and NVIDIA are actually the least correlated because Tesla is a stock and NVIDIA is a company at this point in time. Tesla really is a meme stock. It's got its own environment, own style, own story. Over here, we've got the cumulative returns. And of course, you did at least 900%, but you outweighted Tesla, NVIDIA. You get the best return if you did that over the last 5, 8 years. Worth thinking about. Again, NVIDIA and Tesla are the stories too that jump out are different now. And they are kind of second generation Silicon Valley. So here we've got the DuPont tables. Yeah, we had tax burden, interest burden, asset term leverage, but I want to focus on operating margins and return on equity percentage on a GAAP basis. Just want to show you that, in general, operating margins for Apple have, basically been good and gotten a little better, and ROE is phenomenal. They're obviously doing a lot of share buybacks. Here, operating margins at Microsoft are outstanding. The ROE definitely good too. Amazon jumped around, had a tough COVID period, but it's coming back real nicely. And Google, obviously, really strong in the last 5 years from an ROE perspective. Really did improve their profitability from 2017, from 21 to 24. So Google really did change the profitability mix quite dramatically. Meta, looking good from a profitability perspective on the advertising revenue. NVIDIA, just phenomenal return on equity and phenomenal story here the last 5 years. Like I said, that's the company you want to look at. Here's what I mean by that. Here's just an incredible operating margin. The return on equity performance. Tesla, very weak. Margins, operating margins down to 7%, recovered from 3% in 2023, which is super low. But really, dramatic how negative this company is. Now it becomes positive for 5 or 6 years, but not very strong. And the ROE is 10%. Again, it's a stock, not a company. And AMD, we just point this out. AMD, really weak margins. We'll just throw that in there to take a look. It's not a Mag 7, but it's there for you to look at. All right, free cash flow to net income, enterprise value, tax rate, we'll just skip that, and total debt to capital. Down here, Ford actually very low debt to capital with Tesla. GM is actually the leader, way ahead in free cash flow than Tesla. Keep that in mind. Tesla, respect to its peer groups, what we're looking at here, and GM is much stronger free cash flow. Here is a crazy stock story. No matter what you think, Rivian, GM, Ford, the enterprise value, orders of magnitude. Look, this is a log scale. Tesla is just phenomenal. It's a stock, not a company. Keep that in mind. Tesla is a stock, not a company at this point in time. Returns analysis. So like I said, over the last year, amongst all these companies, what did you want to own? Either Tesla, Meta, or NVIDIA were the 3 best. Google did nothing, by the way. Apple did 5%. So Microsoft actually underperformed the last 5 years. Last year, Amazon did about as well as the S&P. And these 3 companies were the outperformers, with Tesla, the stock, at 94.55% of last year. It's really a stock story. Over time, NVIDIA has been huge runs from 21 to 24 and 15 to 18. The middle period for the COVID period was kind of a weak period for NVIDIA. It had 2 giant moves forward. That's kind of chip evolution story there. And if I put this is the same chart, but I put up against return on invested capital. Look at this incredible move by NVIDIA. Again, here is the story of Tesla, just declining on return on invested capital, not doing very well. Fascinating stuff. Apple, our invested capital because of the share buybacks. Doing quite well. Over here, PEG ratio. Viable stuff, Microsoft, Apple, Meta. Weakest, Google, NVIDIA, and Amazon. Google is the lowest PEG ratio. So there's your best buy story. Actually, NVIDIA, 1.13. Incredible. Just an incredible story here. So this is really fascinating. All the PEG ratios are not offensive, not one of them. And some of them are quite viable. Google, NVIDIA, Amazon, quite viable. All right, profit margins. Gross margin, actually, Meta beats NVIDIA. Microsoft is actually just about like NVIDIA, profit margin perspective. Tesla, again, just super weak margins. Here, earnings margin, NVIDIA, Microsoft, Meta again. NVIDIA tops out here from an earnings margin perspective. EBITDA margin, again, huge move up and down in NVIDIA. Keep that in mind. Here's Tesla at the bottom again there. This one, like I said, is a stock. This one is a company, and you can see that what I mean by that, the fundamentals of NVIDIA. Although I will point out they have topped here and here and here. Keep in mind this year is seeing some topping in these. And of course, the shares of NVIDIA have topped as well. Net profit margin, just phenomenal how much people want these chips. So anyways, I hope you enjoyed this. Thank you for attending. I think these Mag 7 stocks have a story that needs updating. That's why I did this today. And I think you'll agree with me that you learned to reshape your thinking on these stocks and these companies and the story of the stock market. And I hope it provides some satisfaction in your thinking about this. So if you want these slides, give me a call at 866-794-6065. You'll talk to one of our sales reps and you can get hold of these slides. Or send an email to strategy@zackspro.com. Find us on the web at www.zackspro.com. Those are the best ways to get a hold of these slides. And I do these talks with my team, providing the back support, critical support. Doing a great job for you, so you can get a hold of real material information on major stocks. That's what this is all about. 866-794-6065. Strategy call at zackspro.com. Thank you much, all.